All right, okay, welcome once again to our live webinar. So this is going to last the next 45 minutes to an hour. My name is Adam and I'm the editor-in-chief of The Fifth Person. And with me tonight are Rusmin and Victor. How guys?
Hi everyone.
Hello.
All right, so Victor and Rusmin are with me. They are, what do I call you guys? Chief Investment Officers of The Fifth Person? Co-founders?
Co-founders. Yeah.
Okay, co-founders of The Fifth Person and the co-authors of the international book title, Value Investing in Growth Companies. So the three of us will be running this webinar with you tonight, all right? Okay, before we start things, again, this is a disclaimer. This is not a recommendation to purchase or sell any of the securities mentioned in this presentation. The information contained herein are the opinions and ideas of the authors and is strictly for educational purposes only. All right, so let's get straight into the meat. This blue chip stock has fallen 40% in 10 days. Is this your next undervalued investment idea? All right, so what stock could this be? So if you've been watching the news or reading the news recently, this company is none other than Volkswagen. So what happened to Volkswagen and why has their stock fallen in the last 10 trading days? All right. So just to give you a bit of the background about their scandal, the scandal that Volkswagen is in right now is called Dieselgate, and it's a massive scandal in the US and I think in the world as well. All right. So on September 18th, the US Environmental Protection Agency announced that Volkswagen diesel cars were fitted with a so-called cheat device that allows them to cheat on their emissions tests. All right. So basically, what these guys at Volkswagen did is they installed a software into the cars when the cars were in a lab. All right, running their tests. They turned into a safe mode, which allowed the cars to reduce the engine performance and then reduce the emissions, so they could pass the regulator, the emission limits. All right. But the moment these cars went back on the road, they were driving around and they were spewing up to 40 times the nitrogen oxide pollutants limit set in the US. All right. So the EPA basically caught them. And once Volkswagen admitted to the scandal and the news broke, the share prices have crashed. All right. So if you take a look at the chart from Volkswagen, it was at 167 euros. And the lowest that it went to was 101 euros. So there's about a 40% crash in about 10 trading days. It's gone up to maybe at 104 or 114 recently, but it's still a huge drop. All right. So this is what you call a fallen angel. Is it really a good? I mean, Volkswagen is a huge multinational blue chip company. All right. All of us know this company, but it's been hit really bad, and its share price has tanked 40%. And is there an opportunity right here? So this is what this webinar is all about. So
I think the first question is that maybe I want to ask you is there any major concern when it comes to safety for the drivers to drive the cars?
No. Actually, no. It's just basically we're going to cover this. This is a very good question, Rusmin.
Yeah, correct.
Because we're going to cover Toyota a little bit later on. All right, but Toyota basically had a scandal before. That one was really dangerous.
Okay.
All right, but for Volkswagen, it's basically you're just basically killing the environment, but you're not killing yourself. Right. Sure. So, and then this is what you call a fallen angel. All right, and this is a clear example of an opportunity you could look at, especially once you've done your homework and you think there's a clear risk to reward ratio here.
We like to look at this type of situation because most of the time we find it's temporary issue. I remember during I think it's 2011. Is it 2011, 2010? Around that year, do you remember that Japan was hit by a tsunami?
Yes.
Okay, and the nuclear plants that was hurt was owned by this company called TEPCO, Tokyo Electric Power. Okay, so at that point of time, I also saw this opportunity as a temporary issue, and TEPCO actually produced 2/3 of the whole Tokyo's electric power. So if TEPCO were to go bankrupt, right, means that the whole Tokyo, right, has no electricity. So to me, I felt it's a
there's no way that's going to happen.
There's no way it's going to happen.
Yeah.
Okay, the only risk was privatization, and the share price has fallen more than 90%. Okay, and the company is still generating a lot of free cash flow and all this kind of thing. I calculate my risk. The risk reward is very high. I went in and we make money on that. I even told one of my friend, and my friend hold it to now, and he tripled up on the investment by himself.
All right. So again, of course, there's always risk to
And
it.
reward,
I mean, there's always risk to these sort of investments because you never really know if these companies could really go bust or privatize. If you go privatize, it goes bust as well. Yeah. In a way, right?
Nationalized,
right? So in the end, the shares become worthless. Yes. So question is, is Volkswagen at risk of something like this? We will see throughout this webinar. But all we know is now right now they're hit by a huge scandal. We've done our research a little bit. I'm going to share it with you, and of course the prices have dropped 40%. Yeah.
Right. So I think
Let's move on. So basically the question is this our next undervalued investment idea? So this is the webinar outline that we're going to cover for tonight. We're going to go through the background of Volkswagen's business operation, so you just have a very brief overall understanding of what Volkswagen is all about. I'm sure all of you are familiar with this cars already. We're going to talk about a bit more about the scandal and the implications of what this scandal means. Okay, so what's going to happen to them? What is the bill? What's going to happen to Volkswagen? All right, and whether Volkswagen's financial position will allow them to absorb this scandal, or will it put them in a very precarious position down the line? We're going to talk about the current risks as well. If you're going to go right into Volkswagen right now, what are the current risks you need to look out for, and of course you're going to conclude. All right. So with that, let's go straight into Volkswagen's business model, and with that, I have Rusmin with me.
Right.
Tell us a bit more about Volkswagen.
Right. So I think Volkswagen actually has two primary core businesses, and the first one is actually the productions of automotive business. Okay, so this is where you get to see the company actually manufacture cars, trucks, okay, or sometimes even motorcycles and then engines. So they actually sell it to the consumer market and also the commercial market. All right. So these are the main core business. It contributes a huge chunk of the revenue, right? And the other part of the business of Volkswagen is actually the financial services. Okay, so this is where they actually finance the
car purchases.
Car purchases. Yeah. Okay, so they need the loans. Okay, they can extend the loan to them. Okay, without going to the bank. Okay,
so it's actually a complement to their business.
It's kind of a complementary, and on top of that, most car users will actually buy the insurance.
Yes,
they actually sell those insurance to them also.
So this is very profitable branch of Volkswagen as well.
Correct. Yeah. So it's kind of like holistic, comprehensive packages that actually offer to the customers.
Okay.
Right. So and let's talk a little bit more on the automotive segment. Okay. Because this part contribute the most of it, and then I'll pay more attention to this part. Okay. So and this automotive actually has these are some of the brands that they manufacture. Okay. And be surprised. Okay. They don't just own Volkswagen. Yeah. Okay. They own Audi. Okay, yes. They own Bentley. Okay, and then most people are crazy about Bentley. Yep. Okay, and then Lamborghini, Porsche. Right,
Ducati is the Ferrari of the motorbike,
and Bugatti as well.
Bugatti
and Ducati. So all these are really expensive. I mean, some of them are really expensive luxury brands. And you always thought Volkswagen was a kind of like a blah blah kind of car,
right?
But it's still really expensive in Singapore.
Yeah,
but they actually own all these top brands. It's all under Volkswagen. Yeah. So if you didn't know about Volkswagen now, I think you change your mind about the company right now. It's a huge company.
It's a huge company. So it doesn't just manufacture cars. Okay, just to remind you, they also manufacture motorcycles and trucks and all that, right? And sometimes even buses.
Yeah, and I think it's I read this in my research. It's the largest car company in sales, but it's still behind Toyota in the number of vehicles sold and everything. So
just to add on a bit on that point is that in 2014, okay, the numbers of cars that sold worldwide is actually 10 million. 10 million. Okay, so that's quite a number.
There's a lot of cars.
Yeah. Right.
So it's a big company.
These are some of the cars that actually sell. Right. So you got Porsche. All right. Audi R8.
So pick the favorite. Which one would you pick there, Rusmin?
I think I'll go for Land Rover. It's not the wrong company. Okay, but I think these are nice cars, right? So,
Victor, which one will you go for?
I'll go for the Audi R8.
Make sure you have the money to buy it.
And I think one of the largest, the best seller for them is actually the Volkswagen, the Golf version.
Yes.
Okay, I think a lot of my friends actually drove that version. It's one of the most popular car and hot selling cars.
Yeah. At one point of time, I was so tempted to change my car to that. But I decided to save money.
So cars are liabilities, right?
All right.
All right. So this is in terms of the profit that actually contribute connected to the segment. Okay, so you can see that the one in the dark green is actually the automotive segment. So this is a historical profit over the years. Okay, since 2006, and you can see that most automotive industries are kind of cyclical. Okay, so they kind of get hit in 2009 when the whole world is not doing well, right? And then they started to recover. So you kind of like follow the whole economy cycles. Okay, so the huge chunk of it come from the automotive segment, and I think the other small part, which is the light green, is actually the financing services.
And so
Right.
basically, this scandal has hit the automotive segment, and this is really a major thing for Volkswagen. It's not a minor segment for Volkswagen. It's really the main core business, as you can see from the
share
profit.
price.
Yeah,
and the share price as well. The decline. Okay, and this data is actually pulled from the annual reports, and it actually nailed down the number of cars they sold throughout the whole world. Okay, so you can see that Asia Pacific itself is actually growing double digit. At the same time, in South Africa, which is I think about South America.
Yeah,
South America. It's actually the only 10% of it, but it's on a declining trend.
Yeah.
Okay, so most of their major growth will actually come from Asia Pacific. Okay, as more and more people get people in the emerging markets get wealthier. Okay, you get to see people driving Volkswagen, Audi. Okay, so these are brands that is the way I see it from the consumer perspective are very I see it's kind of like mid to high end, that kind of brands, right? So it's kind of good brands.
So another inside story that I can share with you is because my relatives are from China. So when
like all of us, right?
I still contact with my relative in China. Okay, once a year I'll go back to my original hometown to visit. Okay? So I remember I talking to one of my seven uncle. Okay, in China, and I was.
What do you call him in Chinese?
I call him Chisu.
Okay.
So I was asking him about the automotive industry in China. And he was telling me about in China, the Chinese don't buy China brands car.
Of course.
Yeah, because there's always defects and a lot of issues and all this kind of thing. Okay.
Yeah.
And what the Chinese like, especially now they are getting more affluent, getting more rich.
Yeah.
They like to buy into BMW, Audi, Volkswagen, these few brands.
Yeah.
So that's the reason why Volkswagen, especially Volkswagen, is growing very, very fast in China. They are expanding their plant. I knew this because I used to invest in an automotive part manufacturer who works with Volkswagen. Armstrong, yes. Which was privatized. And they are growing very fast because of Volkswagen in China. It's really double-digit growth. Yeah.
So basically, Volkswagen has been growing very well in Asia Pacific. And in Europe is basically the core market, but this scandal has hit them in the US, which is basically a market. The US is, China is the biggest auto market in the world right now. All right, and the US is number 2. China overtook them, and Volkswagen, for its successes in Europe and in China, in Asia Pacific, in China, they've been struggling to get a foothold in the US. So as you can see from the sales figures, they're still, they're still struggling. They're not really growing in the US, in North America, and this scandal happens to hit them right in the US. All right, so this is going to affect their sales in that country for some time to come, especially for the bad press and reputation and everything. And we can talk more about this later on. But okay, let's just move on to the scandal itself and give you a bit more background information. So how did Volkswagen get caught in the first place? Volkswagen they got caught this year in September, and they have admitted that they've been doing this since 2009. So it's about 6 years of cheating the regulators in the US, and
using technology.
So this is really interesting. You expect some brilliant Chinese guy to come up with this from China, but basically the Germans have found a way to basically cheat on the tests. Instead of actually making the cars more efficient, they actually found a way to cheat on the test, and they've been doing it for 6 years. All right, so now everything is everything's out of the bag right now, right? So how did they get caught? So basically, the International Council on Clean Transportation, this is in the US, wanted to investigate why there was a huge discrepancy between the lab tests and the road performance of several of Volkswagen's diesel cars. All right, so this is a diesel scandal. Okay, if you didn't really know. So they worked with researchers from West Virginia University, and they stuck a probe up an exhaust pipe of Volkswagen's clean diesel cars, and then drove them from San Diego all the way to Seattle. All right, so they found out that the cars, when they were on the road, emitted much more pollution than they did in the labs, up to 40 times. All right, so with this information, in May 2014, last year, California's air pollution regulators and the EPA, the US Environmental Protection Agency, ordered Volkswagen to investigate this problem. They wanted them to fix the problem. And Volkswagen basically said, yes, they've already fixed it. All right. But then they continued to test the cars, and then the real world performance still didn't match up to the labs. So at that point, the EPA regulators really started to grill Volkswagen and ask them, why is there still a discrepancy? Right. They even threatened to basically not approve Volkswagen's 2016 line of clean diesel cars if they couldn't fix this problem. So at this point, Volkswagen finally cracked and admitted the existence of these defeat devices, these cheat devices, and which have been hidden in the software code of the cars. All right, so basically this is how the whole scandal blew out, and the share price just tanked. So all of us want to know, especially as investors right now, what are the effects of what the US is calling Dieselgate? All right, so what's basically going to happen to Volkswagen in the US and again around the world with the scandal blowing up in the air? All right, so in the US, they basically have to recall nearly 500,000 cars. So up to 500,000 cars sold in the US have this software installed, which they need to basically recall and fix. All right, so and the EPA can fine, according to the law, the EPA can fine them up to $37,500 per vehicle. So if you do your multiplication, the maximum fine that the EPA can basically slap on Volkswagen is $18 billion, which is a lot of money, because we're going to take a look at the financials later and basically compare this to what Volkswagen is doing right now. So the maximum fine is 18 billion. All right, but Volkswagen doesn't think that will happen, because if you cooperate with the authorities and you give them what they want, they won't fine you the maximum fine. So I give you a case in point. Hyundai and Kia Motors in last year, they agreed to pay $100 million fine when 1 million vehicles in the US were found to emit more greenhouse gases than they were certified by the EPA. So Hyundai and Kia have been hit by fines as well. So they basically just paid 100 million for 1 million cars. But this is a different case altogether. But basically, Volkswagen doesn't think is going to get hit with the maximum fine. But the maximum fine is basically $18 billion, which is a lot of money.
So 1 million car, 100.
Which is basically
100 million. So
yeah.
it's 11 million for Volkswagen. So it's about 1.1 billion.
Yeah, that's a different case from Hyundai and Kia. But basically, that's the maximum fine. So we never know what's the potential maximum risk that you can face from the EPA. All right. Besides the fine, of course, Volkswagen has all the costs of recalling and fixing all the nearly 500,000 cars in the US. All right. On top of the fines from the regulators, they can also face basically lawsuits from the US states and counties. So the individual US states and the counties within the states can sue Volkswagen as well for basically lying about their cars. All right. And of course, they can also face class action lawsuits from dealers and consumers, because dealers for Volkswagen cars are going to be hit by all the bad press. They're going to lose money from sales. These business owners can basically sue Volkswagen. And of course, consumers as well, people who own Volkswagen cars, who bought the cars thinking they were clean diesel cars, they were going to be, safe for the environment. And of course, now with all this bad press, they can't resell the cars at the same value as before. They're going to lose money in that. They can also sue Volkswagen. Okay, so basically, all these people can basically sue Volkswagen's ass. Okay, so so they can basically end up paying a lot of money. All right, no one knows the exact amount yet, but this is basically what they're facing in the US. Okay, so the company itself has already halted sales of its 2015 2016 clean diesel cars in the US. Anyway, no one's going to buy them anyway, even if they want to sell them. So this is the stuff that's going to happen, that they're facing in the US right now. All right, so in the rest of the world, in Europe and the rest of the world, Volkswagen has already admitted that up to, maybe not up to, but 11 million diesel cars worldwide have the same software cheat installed. So it's just only 482,000 cars in the US, but around the world, it's 11 million. That's a lot of cars out there. All right, so most of them in Europe, because that's where Volkswagen mainly is based. All right, so which cars are affected? Basically, the Volkswagen Jetta, the Beetle, the Audi A3. These are all diesel cars again, all right? And the Golf models from 2009, 2015, Passat, Seat, Skoda, and some of the Volkswagen vans as well. So if you own any of these cars, you might be, and they're diesel versions, but we're quite rare in Singapore. These are cars that have that software cheat installed, so a lot of cars out there. So of course, all the stuff that's happening in the US, the same thing could happen in the rest of the other countries as well. So UK, Italy, France, South Korea, Canada, Germany, of course. All right, they're all opening investigations. They can also basically slap Volkswagen with fines. They can get lawsuits from all these countries as well, from the consumers there as well. So it could get really, really, really expensive. Of course, again, there's the costs of recalling and fixing 11 million cars.
Wow.
That's a lot.
That's the number of units they sold last year, 10 million.
Yeah,
Very close
so
to-
to give you a context, they basically sold 10 million cars in 2014 alone, but now they got to recall and fix 11 million cars, and that's going to get. I mean, there's a huge logistical problem. It's going to get really, really expensive. Basically, what's the bill? Okay, can basically Volkswagen? Basically, now the question is, can Volkswagen absorb the financial impact of the scandal? So now we're going to have to take a look at the at Volkswagen's financial statements. We're going to have a brief overview. We're going to dive into some of the key numbers and ratios and the cash levels especially, and whether Volkswagen can basically take on this scandal and basically ride through it and then recover, in a few years time. All right. So according to Credit Suisse, they've been studying this scandal, and they've given three scenarios. Okay, they've got the best scenario, the worst case scenario, the base scenario, and of course the most optimistic scenario for Volkswagen. All right, so the most optimistic scenario basically estimates that Volkswagen has to basically come up with about $22.7 billion to basically fix everything. So that includes the cost of fixing the cars, all the criminal and civil penalties, the total residual value loss. So basically, they have to compensate the car owners for the loss in resale value. All right, and the subsidy clawbacks, because these diesel cars, they were given environmental subsidies for being clean by the governments. All right, so because we now know they're not really that clean anymore, they basically have to pay back all these subsidies to the governments. So this will cost money as well. So according to Credit Suisse, the best case scenario is 22.7 billion, but the base case is about 40 plus billion, and the worst case scenario, which is really, really scary, is 78 billion to clean up everything. And if that really happens, Volkswagen could be really, really deep trouble.
That's more than their market cap.
So 78 billion is more than the market cap. So if that happens, basically Volkswagen is out the window. It's gone. But basically, these are just estimates, and this is from Credit Suisse. And Volkswagen has already made a statement that they do not agree with the Credit Suisse reports. Okay, they have already set aside. Volkswagen has already set aside $7.3 billion to clean up the scandal. All right, so according to a statement by a Volkswagen spokesperson, the numbers are pure speculation, and the calculations are nonsense. Okay, so they don't agree with Credit Suisse estimates. So Volkswagen has set aside 7.3 billion to clean up the mess. So let's take a look. We're going to use those numbers. So basically, Volkswagen thinks it's going to be 7.3 billion, and Credit Suisse thinks it's going to be up to 78 billion. So we're going to take a look at all these numbers and how it stands next to the cash levels and stuff. Okay. All right. So let's take a look at basically the number one thing that everyone wants to look at right now, which is Volkswagen's cash levels. So if you take a look at their balance sheet, the most liquid assets that they have is their cash equivalents, and time deposits, and their marketable securities. So that is about, you add them together, is about $32 billion. They have about $32 billion in the bank right now. So if you think about it, $32 billion in the bank, they've set aside 7.3 to clean up the mess. Doesn't seem like a problem.
Yep.
Right, in the short term anyway. All right, but even if it comes to the most optimistic Credit Suisse scenario, which is basically 22 billion, 22.7 billion, this Volkswagen seems to have enough cash to take care of this scandal. But of course, it goes to 78 billion or maybe even 40 billion. Things could get quite messy there.
Yes.
All right.
Wipe out the whole company.
Could wipe out the whole company. So I mean, of course, Volkswagen has lines of credit and they can borrow money. But again, as things get more messy, the cost of refinancing gets more and more expensive as well, and that will affect Volkswagen. Yep. But at this point, Volkswagen has a pretty good cash balance right now.
Yep.
Right. Okay. Now, the thing is, even though they have quite a high amount of cash, they have a lot of debt as well. So if you take a look at their liabilities, they have about 139 billion in financial liabilities, which I assume are their debt. All right, these are just the debt alone. So even though a lot of cash, they basically have a lot of debt as well, and this will affect their cash levels if they need to pay back these loans at any time.
Yep.
All right. So Victor's going to come in right now, and we're going to take a look further into the financial numbers of Volkswagen. Victor.
So so if you look at Volkswagen for the sales for the past 5 years, they have been increasing because they have been doing quite well in those regions that they are at. And if you look at their net profit, they have been going up and down, up and down. Okay. But if you notice about Volkswagen, right? They are in the auto industry, and the auto industry tends to be more cyclic in nature.
Mm.
But if you look at the past 10 years, because now I only show you the 5 years number. If you look at the past 10 years, the past few years numbers, Volkswagen can every year can easily generate on average their nominal average net profit is about 10 billion.
Mm.
Okay, so that's their average for them.
Mm.
Yep. So if you look at their cash flow, which I've shown you up and down, it's also close to the 10 billion, 9 to 10 billion. Okay, so if you go back and check the cash flow, it's also 10 billion every year.
So it
on
seems
average.
that at this point,
Yep.
that even though the bill could be, let's say the base case scenario given by
2 billion.
uh,
20 billion.
20 is the best case, but the
uh,
base case by Credit Suisse is about 40 billion.
Yes.
It seems that with 40, even if the bill is going to come to 40 billion, which is actually a tremendous sum anyway, it seems that Volkswagen has enough power to generate the cash flow and
Yeah.
not just profit, but the cash flow.
Yes.
And this is operating cash
Operating cash flow,
operating
yes.
cash flow as well, right? To basically generate the cash
Yep.
to pay for all the bills of
So
the scandal.
it takes about 4 years if it's, let's say, 40 billion.
If it's 40 billion, it takes about 4 years,
4 years, about
which is
4 years.
actually reasonable, right?
Reasonable,
It's
yes.
reasonable.
Still reasonable, yeah.
So Volkswagen is a huge company,
Yeah.
and they basically generate a lot of profit and
Yes.
a lot of real
Yes.
cash flow as well.
But of course, if it hits the 78 billion, that's
a-
that's crazy.
that's a huge
Yeah,
thing. And if
that's-
it all comes at the same time,
Yeah.
then Volkswagen could really be
Yeah.
in trouble.
But I don't think that it will be that high. Later we'll share with you cases.
Yeah.
Okay.
We
at
would,
the- at the
yeah,
back.
we talk about Toyota's scandal as well.
Yeah.
But basically, we need to know what the worst case scenario could be, which is basically Credit Suisse's 78 billion.
Yeah.
That could really knock.
That can
Volkswagen.
wipe out
That,
the
that
whole.
basically wipes out.
I think the
Volkswagen.
market cap is about 50 billion.
50 plus billion.
54 billion.
54 billion.
So 70 billion is wiping out the whole market cap.
Yeah. So
Yeah.
highly unlikely, I
Yeah,
think.
highly
but,
unlikely.
But that's the worst case scenario that
Yeah.
I think if you're thinking of investing, you should know about
Yeah.
anyway, right?
I'm very sure that the German government won't let one of their top
That's true.
automotive brands to
Yeah.
go on to get bankrupt.
Yeah.
Okay?
So this is German pride here.
Yeah, correct.
So I think India are right in that sense.
Yes. So next is this the only concerns is their debt to equity.
Yeah.
Okay, like we mentioned, their debts levels are quite high. So if you compare to their equity, is really within the 0.8 to a 0.7 region. So that's quite high for the automotive. So when you want to do analysis, you have to take account of the debt also. See whether they are they able to pay the debt and also pay up the scandal and all this kind of thing.
Yeah.
But of course, if the scandal is as what they predicted is 7.8 billion, then they
7.3 billion.
7.3 billion, then
Yeah.
there will be no issue.
No issue at all.
No issue. They have the financial capability to do that. Okay.
Yeah, and like I said, they have lines of refinancing
Yeah.
and stuff. So a lot. I mean, Volkswagen is a huge company.
Yeah.
If anyone, they are the ones that
Yeah.
could handle a scandal like that.
I believe the bank won't call back the loan just because of this issue, because they are reputable and all that. Unless the bill is 78 billion, then the bank probably will call back the loan.
They will take the money out
Yeah,
first before
yes.
the other banks take them out.
Yeah,
Right?
yes, yeah.
So it really depends on the bill. So at
Yeah.
this point, no one really knows what the exact bill is,
Yeah.
but those are the scenarios.
Yeah.
And we just basically wait and see.
Yeah.
All right. So let's just
Next.
move on.
So they have been generating quite good return on equity for the past few years. They have been above 10%. Only on the 2013, there's one off. So you check the past few years, they are still performing also. So it's still okay.
So basically, it's a very successful company.
Yes, correct.
Doing very well. I mean,
Yeah.
cyclical at times because it's in the car industry.
Yeah, you have to buy it at the right time.
Yeah.
Right.
Yeah.
Right.
But
You buy it at the downtime or buy it during scandal and all that kind of thing.
right.
It's just like or buy it when they're having a tough time and somebody's trying to turn around, like Chrysler. Peter Lynch Chrysler was one of the stocks that give Peter Lynch the, I think, very, very multi-bagger, huge bagger of that, because the company managed to turn it around. Right?
Yeah. All right. So what's next?
Okay. Even though their earnings have been fluctuating up and down, this company have been consistently paying increasing dividend for the past from 2009 to 2014. So this is their track record. They got the financial capability to even pay increasing dividends.
Yeah, they have the cash to basically pay the shareholders dividends.
If you tell me is that Volkswagen brand is those kucing kurat brand, which I don't know, cherry QQ and all this kind of thing, then I might be quite worried when the scandal hit. Okay, but if you tell me Volkswagen owns Audi, Bentley, which is only wealthy people will drive, Lamborghini, Ducati, Bugatti, all this, then probably I think
all the Italian names are
all
coming
the
up.
Italian, yeah. So I think probably they are generally quite okay. It's just that we need to see what is the impact and the amount of the scandal when they actually announce the payment that they're supposed to do.
Yeah, because right now the EPA hasn't set a fine.
Yeah.
We don't know the amount of lawsuits and what they're going to get hit with. But the moment we do, I mean, basically the moment it all comes out and the world knows the fine, you can get a much clearer view of how this will affect Volkswagen financially. So at this point, they seem to have a cushion to handle all this 32 billion in cash, 7.3 billion set aside for this. The CEO has resigned. The Germans are basically doing everything they can to save the company. They've acted really, really quickly to basically contain the scandal and basically own up and say, yeah, it's our fault. Let's see how we can fix it. Even though they're still going to get hit with massive fines anyway, but you can trust the Germans to get things to fix things basically. All right.
Okay.
All right. So
now we come to looking at the valuation part. So now the share price is about 114.7 euro dollar. Okay. If at the current price they are giving about 3.5% yield. That's not very fantastic. But at least they give an increasing dividend. And now you are buying Volkswagen for a P of 5 times and a price to cash flow of 4.9 times.
This is really
cheap.
Really cheap right now.
If you compare Volkswagen to the other auto industry, okay, like Ford and GM and all this kind of General Motors, right? Right. They are actually the cheapest right now because of the scandal.
Yes.
Okay. So there may be some there is opportunity here right now. Exactly like how I see when I bought into TEPCO at that point of time. Okay. It's just that we need to assess once the amount come out, we can assess. Okay. Most investor when the amount came out, they will dump the share. So when the share dump and they drop to a ridiculous price, your risk reward, your reward is higher than your risk by a lot. It's worth to take the thing. We are all taking calculated risk. Okay.
So what you're saying is that basically, right now, Volkswagen's PE is 5.4, which is really low. To give you a context, the average PE, historical PE of the S&P 500, which is the index in the US, is about 15. And when it goes 25, it becomes expensive. It goes down to 5. That's the lowest it can ever go. So basically, Volkswagen is at the bottom end of the valuation
of the all the auto average auto industry.
So if you look at the index metrics and basically the competitors as well, 5.4 PE is crazy low. All right, so it's really cheap right now. And you're saying that again, this is a calculated risk that you can take. So basically, when the fines come out and
more people start to sell and push it even lower, that is really, I felt, it's an opportunity, and we should calculate the new valuation based on the fine incorporate and seeing how much they're going to spend and the plan, and from there we know when to enter into the company at that point of time.
So what you're saying is that when the fines come out in the US,
you don't enter immediately.
You don't enter first, right?
Yes, you wait for it to drop and you see how are they going to pay out the fines. Okay, you choose to buy into the day where the fines are close to pay off. Then you go in. Okay, and that is the time where the sentiments haven't recovered yet, but you know that the company is going to back up on track again.
Right. So this again, we're not saying rush in right now because everything is still up in the air. There are risks that you need to take a look at, and we're going to cover that pretty soon. And but basically, once everything is a bit more settled, and you can basically have a look at how Volkswagen is going to handle this and the cost of handling it, you have a much clearer idea of whether this is a good investment. And like Victor says, if the risk and the reward ratio is like really in your favor, go for it. Maybe if you could like triple your money up or maybe 10 times your money up, but or you could go bust. Maybe it's a good bet.
We triple TEPCO triple, I think, in 1 year or 2 years.
Okay.
Yeah. So that's the opportunity where people it's not buying to that plant. I look at it, I see how they make the money, and the only risk for TEPCO is nationalization.
Right.
Okay, and if you nationalize, a lot of the shareholder going to gone.
But that's a real risk because in the financial, the Great Recession in 2008, 2009, there were a lot of fears that
Yeah.
AIG, Citibank will
Yes.
get nationalized, and Freddie Mac
Yeah.
and Fannie Mae, the U.S. mortgage lenders in here, they did get nationalized,
Yep.
and a lot of shareholders lost money there. So there's a risk there. So again,
Yeah. But the problem is the risk was that minimum.
Yep.
And the reward is very high upside.
yeah.
So
So-
we want to go into more of this kind of investment where the risks are low, but the rewards are like 3 to 4 times upwards.
So it makes sense.
Yeah, but we do a lot on small percentage on a lot of this thing. In a long run, based on probability, we can make.
Yeah. Okay. So again, that goes to another point about portfolio management, which I'm not going to cover in this webinar, but basically, don't put all your money in this just because you think it's gonna.
This is the smallest percentage you ever can.
So
put,
these are
okay?
more special situation investments. You don't put like 10-20% of your money in this because this is stuff that could go either way. But based on your analysis, you think it's a calculated risk, you can go for it again. But don't put everything in. All right. So this is the valuation. Volkswagen is 5.4 P right now. Let's take a look at the risks that you're facing right now. So short term, of course, the costs of the fines and lawsuits, recall, subsidy clawbacks in the US and around the world, they go upward beyond the 7.3 billion that Volkswagen estimates right now. I mean, it could go to 20 billion, 30 billion, 40 billion. If that really goes up, then basically Volkswagen could face a cash crunch. That means they don't have enough cash to pay the bills. They have to start looking for ways to borrow more money, refinance. But again, when usually a company is in that situation, refinancing could get really expensive, especially if the credit rating drops as well. All right. And of course, if it goes to a crazy scenario where the bill is going to be 78 billion, like Credit Suisse says, in this worst case scenario, then you face possible insolvency. So these are the short-term risks that Volkswagen has right now. All right. So if you're looking at Volkswagen, we'll still say you should stay on the sidelines, have a look first, and find out more as more details come out. All right. So these are just a short-term risk, and it seems at the moment that Volkswagen is able to handle the bill that the scandal is going to hit them with. All right. What are the long-term risks to Volkswagen? So basically, long-term wise, of course, this is going to damage Volkswagen's brand and reputation. So I mean, Volkswagen is a huge company. They've been around for so many years, decades. All right. So this is going to hit their reputation and their brand. So when that happens, the cars are going to be harder to sell. Especially in the US, of course, because the US is a market that they haven't cracked yet. They have trouble expanding in the US. So again, this scandal erupted in the US first. So they're going to have trouble, I think, in the next few years in the US because the brand is going to be hit and they're not strong there already. But in the home base of Europe and all that, I think they're going to be fine for the long term because Volkswagen is one of the brands there. And in China as well, I mean, China's cities, I think China is even more polluted than than the cars that Volkswagen is.
I think they're used to it.
So I think if this scandal erupted in China, they would go, what's the problem? Because we have factories and coal plants.
The pollution is even bad.
Yeah, the pollution is so bad in China, but because it's in the US and it's a lot stricter there, there's a huge scandal. Okay, so but basically, back to the point, it's going to damage Volkswagen's brand reputation, especially in the US, and that makes cars harder to sell in the long term, mid term as well. And of course, this will drop. They'll bring a drop in global sales and profits. Of course, now we've seen in the last 5 years, Volkswagen's cash flow and profits have been about 10 billion on average a year, which is a good number for them to generate to handle the bill of the scandal and everything. But if this thing hits them hard in the long term, their profits and cash flow will go down, and that will make it harder for them to pay for the scandal as well. All right. So again, another thing, this is even longer term, is this raises questions about the future of clean diesel technology, because as we know, a lot of car makers now are finding new ways to become more environmentally friendly and green and not rely on fossil fuels so much. So I mean, you have Tesla, who's behind electric vehicles, which I love personally. Toyota has their hybrid models in the Prius and everything, so they're going with a hybrid strategy to basically do clean cars and everything. And Volkswagen, what they've done is they've gone with the clean diesel strategy, which is what they put their weight behind. So, but because of this scandal, basically they're saying that they haven't found a way to get diesel as clean as they want, because instead of getting the emissions below the limits, what they did was they cheated on the test instead. So they couldn't find a way to get diesel as clean and as efficient as they wanted to do. So
But my take on this is, if you talk to a friend and you ask your friend that you want to buy a car, usually what do you talk about? You talk about the specs of the car, you talk about that. But honestly, who will go talk about, I want a clean car, I want to be environmental free.
I do. I like the Tesla a lot.
Okay, I mean that's
That's me,
for
right?
that's for Tesla.
Yeah, but
okay?
most people,
most
yeah.
people they don't do that for most of the cars.
Yeah.
So I believe it's only the governments that is clamping down on this
Yeah,
issue.
because they basically broke the rules
it's
and,
correct,
they lied to the regulators. And but yeah, even they were supposed to recall 11 million cars, but of course they're not gonna basically go to your home and take out the car. You have to drive to Volkswagen.
That's correct.
And of course, there are some owners who wouldn't do it because they rather have the performance in the engines rather than have clean cars. So that really could happen, really seriously.
The key risk is that we are afraid is that no one buys Volkswagen. Right.
In the long,
But like I said, nobody will discuss about whether they want a cleaner car or this kind of thing.
Yeah.
So people buy the car. I bought my car without knowing that whether it's clean or not clean.
I think same here as well. Because Tesla is not in Singapore.
Yeah,
anyway.
Tesla's not in Singapore.
I hope they come. But anyway, back to the point. So basically, these are the long-term risks that Volkswagen has. So basically, they go get hit. Their profits and sales are going to get hit because of damage to their brand and reputation. All right. So now I'm going to bring up a case study. A similar scandal that happened to Toyota a few years back as well. If you remember in 2008, 2009, Toyota got caught in a scandal where basically the cars would accelerate for no bloody reason. All right, so I think it's one of the worst fears that you can have when you're driving a car. Once your brakes don't work, or the car accelerates for no damn reason, basically. So you don't know when you're gonna stop. So that was a serious scandal because basically this scandal was linked to 5 deaths. Basically, the Toyota cars, what happened was that the accelerator pedals got stuck in the floor mats and they continued to accelerate until they hit something and people died. So basically, this was a huge scandal in Toyota. I mean, I think if anything, this is a even worse scandal than Volkswagen scandal right now because people died, and I think no one wants to sit in a car where you're not sure whether it's going to accelerate all of a sudden for no reason. And you're going to die.
This lawsuit will be even worse.
So basically, this happened in 2000, 2009, and Toyota had to recall 12 million vehicles worldwide, similar number to Volkswagen right now, which is 11 million. So Toyota had to recall 12 million vehicles between 2009 and 2011 to basically fix this problem. All right. So in the end, because this has already passed, we know the costs of Toyota's recall and lawsuits and everything. So they spent about $2 billion in repairs and lost sales, basically. All right, they spent $1 billion to settle a class action lawsuit with car owners and a $1.3 billion settlement just last year with the U.S. Justice Department. So basically, the total cost for Toyota is about $4 to $5 billion for this scandal, which, in my personal opinion, is a lot worse than Volkswagen's current scandal. But the difference is that Toyota didn't mean for the accelerator defect to happen. They designed the cars as safely as they could, and this just basically was a mistake that happened in the design. But the difference is Volkswagen basically knowingly cheated and lied to regulators for 6 years.
So the penalty will be high.
So the penalty can be very, very high because you're basically you know you're doing something wrong, but you still go do it. So they could get a huge fine from this. All right, so just to give you a context, Toyota's cost was about 4 to 5 billion. Volkswagen has set aside 7.3 billion, and our Credit Suisse is saying it's going to cost between 22 to 78 billion dollars. All right, so no one knows what's going to happen. So let's just see how this will pan out for Volkswagen in the long run. Like we said, it's not out of the woods yet, but they're one of the biggest car companies in the world. All right, and if anyone, they have the resources and the skill to ride through a scandal like that. I mean, prices are really, really attractive right now. The PE is about 5.4. All right. So, I mean, let's just see and wait what happens in the next few months or, maybe more. But remember, it took about 3 years for Toyota to recover from its scandal. So it's not something that, if you have any false expectations now where you're going to come in, you can go in right now and it's going to, the scandal is going to clear within a few days and then you're going to triple your money up. Don't think like that. I mean, it took years for Toyota to basically, go through its scandal, get out of it. But for those, if you take a look at Toyota's chart, those who got in at about 2,000 yen, the share price is about 6,000. So I think it was about 6,000. So they triple up their money in Toyota if they got in at the right time. So basically, something similar is happening in Volkswagen right now. wait on the sidelines,
Yes.
see what's going to happen, the details of their fines in the US and in Europe, see what the total bill is going to be, because everything right now is still up in the air. And once you know that bill, you take a look at Volkswagen's financials
Statement and estimate
and-
how long are they going to take to pay the
yeah,
bill.
and see, and over the next few quarters and years as well, you have to take a look at whether their sales and profits are suffering. Because if you really, maybe they can handle the scandal, but down the line, their cars really don't sell anymore. Of course, Volkswagen is still in trouble. You just all this is assuming that Volkswagen is going to be a-okay back pre-scandal as well. All right, so this has been basically an overview of basically this whole Dieselgate scandal and how Volkswagen is going to handle it.